What's happening, crypto fam? Get ready, because the news cycle is absolutely wild today, and we've got the breakdown you need to stay ahead of the curve. The market is moving at warp speed, and if you're not plugged into the latest, you're missing out on massive opportunities. We're diving deep into critical price movements, analyzing historical patterns, and uncovering innovations that could reshape the entire landscape. Are we on the brink of another explosive rally, or is a correction on the horizon? You've got to see this. First up, we're dissecting the latest Bitcoin price action. Is it poised for a breakout, or are we looking at a potential breakdown? This is crucial information that could impact your portfolio directly, so buckle up. Then, we're tackling that burning question. How low can Bitcoin go in September 2025? We've got expert predictions and historical data that paint a fascinating picture of what might be coming. You won't want to miss this analysis. We're also exploring a groundbreaking partnership that's bringing real-time collateral verification to Bitcoin pricing, a move that could revolutionize DeFi security and trust. This is innovation in action, and we're breaking it all down for you. And finally, we're looking at Bitcoin's performance as it enters its historically weakest month. What does the data tell us about the potential for volatility and opportunity? Get ready for an information-packed episode that you absolutely cannot afford to miss. Hit that like button, subscribe, and ring that notification bell so you never miss an update. The crossroads of volatility. Will Bitcoin break through or break down? Bitcoin's current trading environment is a tightrope walk, with the digital asset hovering around the $107,800 mark. This position, precariously close to short-term support, comes after a weekend of considerable volatility. The cryptocurrency's struggle to regain its August highs, which peaked near $118,000, has persisted as sellers continue to exert pressure. This selling pressure is amplified by significant whale movements and an acceleration of spot outflows, indicating a potential shift in large-scale holdings. The narrative is further complicated by a substantial $215 million Bitcoin sell-off, reportedly linked to a major holder transitioning their assets into Ethereum. This strategic move has ignited widespread discussion regarding institutional investment strategies and their impact on market dynamics. Adding to the complexity, data from CoinGlass reveals a net outflow of $151 million in Bitcoin on September 1st, underscoring a persistent trend of selling activity. With technical indicators pushing towards critical support levels around $107,000 and ongoing macroeconomic discussions hinting at a prolonged bull run later in the year, Bitcoin finds itself at a critical inflection point. On the technical front, a descending trendline established in mid-August continues to dictate Bitcoin's price action on the 4-hour chart. Multiple rejections at the $109,000, $110,000 range have solidified this area as significant resistance. Immediate support is identified at $107,000. A breach below this level could open the door to further declines, with bids potentially materializing around $105,000. The clustering of exponential moving averages also suggests a period of consolidation or a potential breakout scenario is imminent. This confluence of technical resistance, selling pressure from major holders, and broader market sentiment places Bitcoin in a precarious position. The question on everyone's mind is whether the asset has the momentum to overcome these hurdles and push towards new highs, or if it's set for a more significant correction. The coming days will be crucial in determining the short-term trajectory of Bitcoin, with traders and investors keenly watching for any signs of a decisive move. But is this the only challenge facing Bitcoin? Stay tuned, because we're about to dive into the historical patterns that might predict its path through the rest of the year. September's shadow. Can Bitcoin defy its weakest month? The question on every investor's mind right now is, how low can Bitcoin go in September 2025? This query gains urgent relevance as the cryptocurrency enters what is historically its weakest trading month. Beginning September 1, 2025, Bitcoin is trading at $108,253, showing a 0.49% dip from yesterday and marking a concerning 6.5% decline throughout August. This downturn reflects not only seasonal patterns, but also technical breakdowns that suggest further weakness may be on the horizon. Bitcoin's current price action is a critical juncture. It has broken a 4-month winning streak, with August's 6.5% decline coinciding with substantial outflows totaling $751 million from US-listed spot ETFs. The cryptocurrency now trades near $108,000, a significant 13% below its August all-time high of $124,533. This price action fuels concerns about Bitcoin's ability to sustain its support levels as the month progresses. To understand Bitcoin's potential September performance, we must examine its historical data. Since 2013, Bitcoin has averaged a minus 3.77% return in September, closing the month in negative territory in 8 out of the past 12 years. This phenomenon, often dubbed Red September, mirrors broader market trends, as the S&P 500 has also seen average returns of minus 1.2% in September since 1928. Yuri Berg from FinTrade explains this recurring pattern. Many investment funds close their fiscal year in September, divesting losing positions for tax reasons and rebalancing their portfolios. This structural selling pressure can create a self-reinforcing downward spiral as traders anticipate and react to anticipated weakness. However, not all analysts are bearish. Fencer argues that a September dump is not coming this year, drawing parallels to 2017, when Bitcoin found support after August weakness before experiencing a massive surge. Technical analysis reveals Bitcoin hovering near a crucial $105,000 base, a zone that previously acted as resistance but has now flipped to become support. This critical support zone extends down to the psychological $100,000 level, where significant buy orders are anticipated, further reinforced by the 50% Fibonacci retracement level. From current levels, a maximum 8% decline to $100,000 is projected, with downward movements seen as potential reaccumulation opportunities. Despite bearish technical indicators, some analysts point to hidden bullish divergence on Bitcoin's RSI, suggesting underlying strength. Analyst ZYN projects Bitcoin could reach a fresh all-time high above $124,500 within the next 4-6 weeks based on these patterns. While Changelly and Binance forecasts show more conservative price targets, the debate between seasonal headwinds and potential bullish divergence continues, making September a pivotal month to watch. While the price charts tell one story, a new development in decentralized finance might be building a foundation for greater stability. Stick around as we uncover how Solv and Chainlink are revolutionizing asset verification. Fortifying DeFi, Solv and Chainlink pioneer real-time collateral verification. In a significant move to bolster trust and security within decentralized finance, Solv Protocol, a key financial services provider for Bitcoin holders, has joined forces with the renowned decentralized Oracle network, Chainlink. This collaboration introduces real-time verification of Solv's actual BTC reserves, which back its liquid token, SolvBTC. This crucial data will now be integrated directly into its price feed, marking a substantial leap forward in transparency for DeFi users. What sets this integration apart is its departure from traditional price feeds that rely solely on market data. The newly established SolvBTC secure exchange rate feed ingeniously combines exchange rate calculations with immutable, real-time proof of reserves. This fusion delivers an on-chain redemption rate that is firmly anchored in verifiable collateral, providing a level of certainty previously unseen in the wrapped asset market. Furthermore, the mechanism incorporates built-in upper and lower bounds derived directly from reserve data, rendering it highly resistant to manipulation and significantly enhancing its safety for deployment in sensitive decentralized lending markets, such as those operated by OV. Ryan Chow, co-founder and CEO of Solv, expressed his enthusiasm for the partnership, stating in a press release, "We're excited to work with Chainlink to launch a secure exchange rate feed. This marks a major evolution in DeFi security, allowing protocols to more accurately price wrapped assets by leveraging redemption rates rooted in verifiable collateral, powered by the Chainlink standard. The SolvBTC secure exchange rate feed is now operational on the Ethereum mainnet, with ambitious plans for expansion to other prominent blockchain networks, including Bob in the near future. SolvBTC, which was launched in April 2024, serves as a liquid staking token backed by Bitcoin. Its primary function is to empower BTC holders to actively participate in the burgeoning DeFi ecosystem and generate yield, all while maintaining their direct exposure to Bitcoin. The process involves users depositing their BTC to mint SolvBTC, which acts as a liquid representation of their staked Bitcoin. This tokenized form can then be seamlessly utilized across a wide array of DeFi protocols, including investment vaults, decentralized exchanges DEXs, and sophisticated lending platforms. Chainlink's proof of reserve, POR, technology is pivotal in this integration. It utilizes Chainlink's robust decentralized Oracle network to meticulously verify that the on-chain supply of tokenized assets, ranging from stablecoins to various wrapped assets, is indeed fully backed by actual reserves held either off-chain or on separate blockchains. With billions of dollars worth of wrapped assets currently circulating within the DeFi space, the demand for transparent and reliable pricing mechanisms has never been higher. By ingeniously combining its advanced POR capabilities with price feeds and leveraging Chainlink's existing cross-chain interoperability solutions via CCIP, Solv is paving the way for wrapped assets to function securely and reliably as collateral across the increasingly interconnected landscape of multiple blockchains. Johan Eid, Chief Business Officer at Chainlink Labs, eloquently summarized the impact. By combining real-time collateral verification with exchange rate logic, this solution delivers a redemption rate rooted in cryptographic truth, raising the security standard for wrapped assets across DeFi. This collaboration represents a significant step towards a more secure and trustworthy decentralized financial system. Innovation is clearly reshaping the financial landscape, but how does this translate to the broader market sentiment? We're turning our attention to Bitcoin's entry into its historically weakest month and what that means for investors. September's seasonal squeeze. Bitcoin faces historical headwinds. Bitcoin is entering September trading near the $107,000 mark, a point where historical data suggests caution is warranted. This month has consistently been the weakest for Bitcoin, with an average median decline of approximately 5% and an average loss of around 6% over the past 12 years. This seasonal pattern is a recurring theme that traders closely monitor. Adding to the market's current dynamics, the premium that MicroStrategy holds over Bitcoin appears to be diminishing. Nick Ruck of LVRG Research suggests this trend reflects growing investor skepticism regarding the sustainability of corporate treasury models heavily reliant on crypto accumulation. Ruck commented, MicroStrategy's recent struggle to maintain its Bitcoin premium reflects a broader market shift where investors are questioning the sustainability of corporate treasury models focused solely on crypto accumulation, a dynamic that could be exacerbated by September's historically bearish trend for crypto assets. He further elaborated, this cooling appetite underscores a maturation in crypto markets, where structural vulnerabilities and competition are forcing a reevaluation of what truly drives long-term value beyond mere Bitcoin proxies. The broader market sentiment is also influenced by macroeconomic factors. Anticipation of potential Federal Reserve rate cuts in September could provide some relief and potentially soften the seasonal drag on Bitcoin's price. However, the opposite scenario, involving fresh outflows from Bitcoin ETFs or a broader sell-off in the equity markets, could reinforce the historical bearish trend, potentially pushing BTC towards the critical $100,000 support level. Delving deeper into the historical performance, since 2013, Bitcoin has closed September in negative territory in 8 out of 12 years. Notable drawdowns include a 13% slide in 2019 and a significant 19% slump in 2014. Even during periods of overall market bullishness, rallies have frequently stalled during this month. The exceptions have been 2015, 2016, and 2023, which saw gains ranging from 2% to 7%. This consistent pattern has led many traders to approach September as a predictable seasonality trade. Seasonality in financial markets refers to the tendency for assets to exhibit regular and predictable fluctuations that recur throughout the calendar year. While these patterns might seem random, they are often attributed to factors like profit-taking around tax seasons, typically April and May, which can lead to price declines, or the generally bullish Santa Claus rally observed in December, driven by increased demand. This phenomenon is not exclusive to cryptocurrencies. Traditional equity markets also experience a similar mid-year weakness. However, Bitcoin's inherent volatility tends to amplify these seasonal effects, making them particularly noticeable. As we navigate these market trends, it's clear that staying informed is key. Make sure you're subscribed so you don't miss our next deep dive. All right, let's do a lightning recap. Bitcoin is at a critical juncture, facing potential breakout or breakdown. September is historically weak for BTC, with analysts weighing in on potential price drops and recovery. Plus, a major partnership is boosting DeFi security with real-time collateral verification. Don't miss out on any of these crucial updates. Make sure you're subscribed, hit that notification bell, smash that like button, and let us know your thoughts in the comments below. Follow us on all social platforms for even more insights. We'll see you in the next one.